This is Radio Free Wall Street with Lee Adler, on the web at radiofreewallstreet.fm and wallstreetexaminer.com. Hi everybody, this is Radio Free Wall Street, recorded Thursday, April 16th, 2015. I'm Lee Adler. Today I'm going to take a look at some of the economic data that was released this week, including the industrial production data, the data on retail sales, housing starts, and of course today's release on first-time unemployment claims. The issue with the economic data isn't so much that we want to know whether the economy is weaker than people think it is, and that's going to cause the market to go down, or whether it's stronger than people think it is, or whether that will have any impact on the market at all, because the economy itself is not what drives the market. Liquidity drives the market, and the economy has an impact on liquidity via central bank policy. So we want to know, essentially, what the actual data is doing in the big picture. Is it still on trend or not? Has anything changed? Is anything materially different? Because we want to know if the Fed in particular is going to change course from its current policy of threatening to raise interest rates at some point in the next couple of months. So we're going to take a look at the charts and decide for ourselves if there's anything there in terms of the actual data and the trend that would cause the Fed to modify its policy. The problem with the headline numbers that is released in the media is that it is the seasonally adjusted month-to-month nonsense number that a significant percentage of the time misrepresents the trend. The market often goes off in a direction based on information that is incorrect, and then of course it has to self-correct in a couple days when it realizes that there really was nothing to that report. So we want to look behind the headline numbers and look at the actual data, which I post these reports regularly on the Wall Street Examiner, but we're going to take a look at 3 or 4 of them right here today. Also, the issue of the Fed raising interest rates. The New York Fed's head trader, Simon Potter, has been out on the hustings making speeches to try to reassure money market participants that the Fed does have the tools to control interest rates. I read the speech that he gave yesterday, and he did score a few points, I must admit, so I'm having second thoughts, thinking that there are areas where the Fed may be able to exert some degree of control. I'm not at all certain about that, but I'm not as certain as I was before that the Fed will have no control. So I'll get into that discussion momentarily, but first let's take a look at some of the economic data to see if there's anything here that would encourage the Fed to change directions. Housing starts today were reported at a seasonally adjusted annualized rate